what happens to an asset that is in a secular uptrend, driven by liquidity, that also has a lot of investor and speculative interest with this adoption curve, is every 4 years, everything goes a little bit bananas. So on a linear chart, it does this, and then it does this. On a logarithmic chart, it's all normal because it's exponentials. And this is the point. You've got to roll 10 trillion of debt. What you do is you debase your currency by liquidity. And what happens is prices start to rise. Prices start to rise, creates a reflexivity in this space. And what happens is prices rise even more.
The banana zone is a term coined by Real Vision founder and CEO Raoul Pal to describe a specific area on financial charts where market assets, particularly cryptocurrencies, experience high volatility and extreme price movements. Pal humorously uses the term to describe regions of a chart where market behavior seems erratic or bananas, often signaling potential investment opportunities. He has been predicting the arrival of this zone for months, and believes that the breakout is imminent, as most obstacles have been cleared. However, Pal identifies two remaining factors that could delay this breakout: the U.S. presidential election and the confirmation of central banks reversing their policies from tightening to easing. The U.S. election is causing significant uncertainty in the markets, which has been reflected in recent outflows from Bitcoin exchange-traded funds. On Monday, Bitcoin ETFs saw $580 million in outflows, marking the second-largest single-day outflow to date. This suggests that cryptocurrency investors are bracing for increased volatility in the aftermath of the election. Despite these short-term challenges, prominent figures like Pal are optimistic that the current sell-off will be temporary. He predicts that it will be followed by a large influx of investors returning to the market, which he believes will trigger the long-awaited banana zone. In a recent fireside chat with David Savage, Pal shared his general outlook on cryptocurrencies and the global economy, offering insights into what could be a transformative period for the market. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
Thanks, and enjoy the video.
Everyone's waiting for the banana zone because it's a current function of what's happening in the macroeconomy. It's a feature of the market, and it's a great meme that kind of sums up what it's all about. And it looks like a banana because it does that and it goes bananas. In Cayman, we have an expression which is soon come, which is like, yeah, any day now. It's like, from the macro work that I do, and I probably produced, I don't know, maybe 100 charts on this last month, it's right here and now. We're already seeing the signs of all of the liquidity coming, all of the leads of this stuff. For some reason, the market seems a bit choppier than it should do. And the other thing, weird thing, why the banana zone is so important is, like, everybody's hopes and dreams are in the banana zone. Is that true, right? I mean, literally everybody. I mean, anybody in Web3, they kind of know about what the power of crypto is in wealth generation. You know, again, 150% a year returns from an asset class since 2011, with 3 80% plus drawdowns included. When I move out the risk curve to Ethereum, it's about 170-something% a year. When I get to Solana, which is earlier in its adoption curve, it's 280% returns a year. This makes a mockery of any other investing. And so what happens is people end up becoming more and more invested in this space. And so the banana matters to them a lot. But that function of the token price going up drives a lot more activity, which is venture capital activity and other investment activities. People recycle profits. And so what you've got is this perfect behavioral incentive loop that drives this ecosystem, which is why this ecosystem is so much faster. Because in the internet, we couldn't own a part of it. Here you're owning a part of the infrastructure layer. And that's an amazing, empowering thing. And everybody in the world can own it. Imagine if everybody could have owned a share of the internet. That's what we're dealing with here. This is why it's Web3.
Yeah. As someone who's out side of the tent, I found it was interesting that you predicted that the crypto industry could reach 5 billion users by 2030.
What it's basically doing, the number of active wallets, which is in your world with IP addresses, right? So I compare the two. So when the world had 5 million IP addresses and 5 million active wallets, so look, we all have multiple wallets and multiple IP addresses. From that point, the internet was about 1994, I think it was. And we take the snapshot of crypto at the same time. Crypto is growing at twice the speed of the internet. Staggering. Why? Because it's built on top of the internet. Kind of makes sense. When you extrapolate that trend rate of growth out and assume it slows by using how much the adoption of the internet slowed as you start to get larger scale adoption, you get to 5 billion by 2030 or so. If we're at 500 million today, or 550 million, I think Crypto.com, who sponsors here, I think do that, or Blockchain.com, I can't remember who does it, but at 500 million, if it grows at 100%, well, next year it's 1 billion, and then it's 2 billion, and it's 4 billion. So it happens very fast. Technological adoption in these exponential trends are super fast. So what that means to all of us is, and I'll go back to what's driving it. One of the key drivers is this is now a $2 trillion market. And if we extrapolate these trends, it's going to $100 trillion by about 2032, 2034. 2 trillion to 100 trillion is the most amount of wealth the world has ever generated in a 100-year period, sort of 50-year period. The entire value of the US stock market is $50 trillion. It's twice the accumulated value of everything that the United States has produced in terms of public companies. Right, that's the scale of what is happening here.
Raoul Pal has expressed his belief that the crypto market could eventually reach a valuation of $100 trillion, driven by several long-term macroeconomic and technological trends. He highlights the concept of network effects, where the value of a network grows exponentially as more users join. According to Metcalfe's law, which states that a network's value is proportional to the square of its users, this growth potential could push the valuations of crypto assets to unprecedented levels as adoption by individuals, businesses, and financial institutions increases. Pal also points to global central bank policies, such as low interest rates and quantitative easing, which are creating vast amounts of liquidity. He believes this liquidity will increasingly flow into digital assets, especially as traditional assets face diminishing returns. With many investors seeking diversification and higher returns, crypto is becoming an attractive alternative. Pal sees cryptocurrencies as central to a digital revolution, similar to the internet boom but with even broader implications for finance and ownership. He views decentralized finance, non-fungible tokens, and Web 3.0 as key components of a new financial and economic system that will transform how value is transferred and stored. Pal predicts that this shift will lead to exponential growth in the crypto space, potentially reaching a $100 trillion market capitalization. In a detailed discussion with David Savage, Pal explores how investors can capitalize on this massive opportunity. Check out more clips from the chat for additional insight.
So listen, I'm a macro guy. I look at macro trends and I bet on them accordingly. I've done that for my whole career. And so it would have been currencies or commodities or stock market, whatever it is. And suddenly this asset comes along that is a supermassive black hole. It is, as I said, literally the NASDAQ is the second best performing asset in the world at 18% a year. If you look at the price of the NASDAQ versus Bitcoin, it's down 99.97%. And it's a hard thing to learn because we're told always to have diversified portfolios. Don't have your eggs in one basket. Don't do this, don't do that. Me and many of the people I grew up with in macro, and the macros are like the George Soros of this world, the people who really take the big bets and try and figure out the global puzzle, have just reduced it down to this is the biggest trade of all time. And therefore, why do anything else? So my personal portfolio, 100% of my liquid net worth has been in crypto for quite a while now, 5 years plus. And I've been investing in the space since 2013. You have an 8% hurdle rate on your savings. And you think, oh great, rates went up and I'm earning X% in the bank and this is great, you don't realize that you can buy less assets every year. Think how screwed young people are. They can't even buy the houses. They're having kids at the lowest rate in history. Why? Because they can't afford to. Their future has been robbed from them. They come out of university with debts. What choice do you have? Oh, buy the FTSE. The FTSE's gone nowhere in 25 years. What are you going to tell them? Oh, work 3 jobs. Well, that's what they're doing. Their answer is, you're going to have to invest and you're going to have to take risk, and they are. And for all of us, we've got this 8% hurdle rate. To a young person, it's worse. They can't even get on the ladder. So crypto investing is one of the most powerful things you can do. We're also, many people here are building in the space because we see a better future for the internet using this technology. But investing in it, I think it has to play an important part of people's portfolios. And most people start, when I speak to, let's say, large family offices, they always have a fight about it, about allowing it. They invest a bit, it's like 2% of their portfolio. Before you know it, they're at 20%, and then before you know it, that's all they ever do. And so, I would say, even if you want to be really conservative, if you were to buy 10% of your portfolio, of your savings, your assets, your net wealth, put 10%, and let's say in Bitcoin, because it's easy, without complicating it, and it goes up on average 150% a year, your entire portfolio goes up 15% a year from that one asset. That beats your hurdle rate immediately. Now, there are going to be years where it's going to go down 70 or 80%, and you're going to have to deal with that. That's why you get paid 150% a year returns. But if you've only got 10% and it goes down, you lose. If it goes down 50%, you lose 5%. You don't care. It's not going to kill you. So just think of the optionality of how much it can change your life. We've never been given this number go up technology before. And yes, your mileage may differ. The future returns may not be the past returns. All of that. But anybody who's here understands the breadth and depth of what is being built in this new world. And therefore, investment is about probabilities. What is the probability that these hundreds of thousands of developers, business people, giant brands, all of these, what is the probability that this technology gets adopted at a broader scale? It's got to be very high.
Amid recent price fluctuations and shifting market conditions, it's easy to overlook the immense potential of the cryptocurrency and digital asset space. For the first time in modern financial history, equal opportunities are available to investors around the world, whether from developed, developing, or underdeveloped nations. With 24/7 trading and investment access, anyone can participate in the market without barriers. But crypto offers more than just equal access. It presents a unique opportunity to preserve and grow wealth in the face of ongoing fiat currency debasement by central banks. Millions have already built generational wealth in this emerging industry, often by making small, timely moves. The current financial system is faltering, and central banks are exacerbating the issue by printing and devaluing currencies. Weak currencies are collapsing, and even the strong ones are quickly losing ground. This could eventually affect billions of people globally. As Raoul Pal bluntly states, the future is uncertain, and the only way to navigate this storm is by staying ahead of the constant monetary debasement. Relying on wages alone won't suffice, as even the most stable currencies are losing 7 to 10% of their value each year. The solution to the financial crisis is investing in the best-performing asset class the world has ever seen, crypto and other digital assets. Do you agree with Raoul Pal's thesis about the big liquidity picture and its impact on the markets, especially the cryptocurrency market? Share your thoughts in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.